Good morning, everybody. Happy Monday, December 5th. Hope you guys all had an amazing weekend. Very excited about today because we are approaching our Mastering the Charts event. That is going to be this Saturday, Sunday, and Monday from 9 a.m. to 4 p.m. Eastern time. So keep that in mind if you haven't registered yet. You'll want to do so on our website on theelitetrade.com. You can scroll down. We've been making some enhancements to our website, so take a look. I'm going to give you all the details, not only on the 3-day event, but also that you're getting the 1 month of follow-up sessions on Tuesday and Wednesday from 11:30 a.m. to 1 p.m. Eastern time. And we have included some more of your guys' testimonials from our previous Mastering the Charts event. So feel free to take a look. Again, I'll post that link in the chat for you guys for those of you who haven't registered yet. Prep screen is posted, so this is our normal one that we use, and then we're also going to start including the one that Jeff posts in the Discord group session. So take note of both of them. It's going to encompass a lot of different futures products that sometimes hit prior to our session starting. So just make sure you're mapping out all these trade opportunities. Equity index futures grid has been updated as we did hit some of our sell territories. Some of these zones may be a little bit further away though, so keep that in mind. Looking for more of those active trading setups, we may want to look at some of these setups on this prep screen. But this one, again, zones are a little bit further away as we are starting to get some more volatile price movements, so just keep that in mind. Also, it is an inside day. So on inside days, look for price to fill the gap, which means returning to the prior session's closing price. I'll show you what that means as we go through the equity indexes. And then always, of course, be aware that market conditions may be choppier until we break above the prior session's high or below the prior session's low. So being a little bit more cautious today, one, because it is an inside day. And then also taking a look at the news is going to be a little bit more on the bearish side. It's going to be this box up here. This longtime bear warns of a trapdoor situation looming for the stock market. It's going to be on Market Watch. And then Yahoo Finance, stock futures fall ahead of more economic data. So another thing to pay attention to is going over to Econoday, looking at what economic reports and data are coming out so that we can be prepared for some of those volatile price movements in the markets. So we have, coming up 9:45 a.m. Eastern, we have PMI composite flash. I don't believe that's a market moving report. I think factory orders and ISM services, we're going to want to keep an eye on those. Those are both at the 10 o'clock reversal time, 10 a.m. Eastern. And then breakout trade opportunities, taking a look at copper down on the 15-minute time frame, seeing an area where we have some support being tested at least 3 times. So looking to take that breakout short, 15-minute time frame below 3.383. Also keep an eye on if we do have that pocket of points to the downside, this may be one that we want to stay in a little bit longer. And then again, here's this prep screen as well too. So take a screenshot of this and make sure you're marking your charts with all these different trade opportunities too. You'll notice we have several breakout trade opportunities that are represented by the arrows to the upside or to the downside. And then also some areas where we have some buy zone and territory trade opportunities. And then we'll recap at the end, go over our open buy and sell zones so that you guys have these moving forward, since oftentimes a lot of these zones hit after our sessions. Alrighty, so back over to, again, Mastering the Charts coming up this weekend, going right into the news, just getting a feel for what they're putting out there right now, just gauging a little bit more on the bearish side for today. So again, this longtime bear warns of a trapdoor situation looming for the stock market. Let's see, here's why the smart money is betting on value stocks to outperform growth, and just getting a feel for what they're putting out there. Other traders are likely going to be basing their trading decisions off of what they're seeing in the news. So Yahoo Finance, let's see, stock futures fall ahead of more economic data. Going to want to pay attention to that. Again, other economic reports coming out are going to cause that volatility in the markets. See, meet Yahoo Finance's 2022 Company of the Year, Costco. So another one that we may also want to keep an eye on. Economic calendar. So again, important to pay attention to not only what's going on for today, but the rest of the week as well. So Monday, December 5th, 9:45 a.m. PMI composite flash. Just want to scroll down, make sure what that black dot means. When you scroll down, we can see that's a other key indicator. The two that we definitely want to keep an eye on are the green dots and the red dots. Green ones are meriting extra attention. Red dots, market moving indicators. Right, Scott? All right, so 2 reports there. And again, looking forward to see tomorrow. We do have a market moving report before the session starts. So want to pay attention to that. 8:30 a.m. Eastern time. We have international trading goods and services. Wednesday, no market moving indicators, but productivity and costs at 8:30 a.m. Eastern time. Jobless claims, that's going to be a market moving one on Thursday. And then PPI final demand 8:30 a.m. Eastern time. So several of these, just keep in mind, do start or do get released prior to our session starting. And we just want to be prepared for those if we are trading in the markets before then. Trend right now, not going to be keeping a huge eye on this. Typically, we're looking at this when we're having those big moves in the market to the upside or to the downside. In this case, it is an inside day, so expecting some of those choppier market conditions. That's how I'm going to be gauging our trading environment for today. All right, let's jump into the charts now. So we've got a lot of our foundation down. First, taking a look at oil, you can see on the 1 hour time frame that we are in between our sell territory and our buy territory. Going down, just zooming in a little bit more, I can see an area where we have tested support once, twice, 3, 4 times. Price breaking through the support area. We look for price to come into our 10-minute buy zone. That's going to be at 78.86. Stop at 78.40. Price currently moving higher. We want to keep an eye on our zones within our sell territory. So I have 2 that are on the 1 hour time frame. If you would like, you can go down, 59 more time frames minute by minute to adjust these zones within your risk parameters. But just keep an eye on these as we are approaching some of these zones within our larger time frame sell territory. We may start to see some of those sell orders getting filled as price moves higher. All right, S&P, as mentioned, very much an inside day. So we haven't broken that prior session's high. We haven't broken the prior session's low. Currently, today's candle is within that range. And as such, it's an inside day. So we know we're looking for choppier market conditions, and we're also looking for price to fill the gap. So what that means is we look at the dashed blue line, which is showing where that prior session's closing price. We would anticipate that price would move higher from where it is now at 47.75. In order to fill the gap, we'd expect it to start moving higher up to 40.66.75. So keep that in mind. Make sure you're marking prior sessions high, low, and close. If we are an inside day, we're looking for price to fill the gap up to the prior session's closing price. Since price currently, as of now, is opening lower than the prior session's closing price, we'd look for some sort of a rally back up to that closing price. Hey, Ron, let's see if today's candle hasn't formed yet. How is a determination made for inside day? If you have time, can you explain, please? Yeah, so inside day is based off of the prior session's candle, which is already completed. That's going to be where we're seeing these solid blue lines marking the prior session's high and low from Friday. We're using today's candle just based off of where it is at 9:30 a.m. Eastern time. So right now we can see that it hasn't broken that high or low. So it's based off of Friday or the prior session's trading activity. And just if we had broken above that high or low point, then it would be an outside day at this point. But since we didn't break above that high or low, then it's considered an inside day. Once it breaks above or below, that's when it transitions to an outside day and we start looking for more of those trending opportunities. Okay, perfect. Yeah, all about the prior day's candle. Today's candle can move, and then once it breaks above or below, then we're an outside day. Good question. So we'll keep an eye on that. Again, we can see our zones are going to be a little bit further away. We have a 10-minute one, 39.27.75. With our stop at 39.15.25. One thing I would keep an eye on here is the trend is still continuing to the upside. So notice on the S&P, if we're looking to draw some of our pivot points and mark our high and lows, we are continuing to make higher highs and higher lows. So looking to trade with the trend, I'd be a little bit more cautious taking short trade opportunities with the trend being more to the upside. And we are continuing to fill this pocket of points to the left-hand side. So we're looking for price to come up to fill that gap. We have a pocket of points to the left-hand side. And then we also have a buy zone down here at 39.27.75. With it being an inside day, just expecting choppier market conditions, not going to be looking to trade the S&P as much, which is why it's good to refer back to this prep screen to look for some of those smaller time frame, more active trade opportunities. All right, and then let me drop it down real quick to the 20-minute time frame. So just make sure you're looking on the smaller time frames to get more detail. That dashed blue line is going to represent the prior session's closing price. So we're going to look for trade opportunities for price to either drop into a buy zone and come back up to fill that prior session's closing price, or also taking breakout trade opportunities to the upside to fill that gap. However, preface this that on inside days, breakout trades are elevated risk. So really we're looking for price to come down to a zone in order to fill that gap. But our prep screen zone is a little bit further away. So that's going to make our trading environment just that much more challenging for today. Going over to NASDAQ, we can also see that we are an inside day as well. Here's our prior session's high, prior session's low, prior session's close. Today's price action has not broken that high or low, so it is also an inside day. We're going to want to keep an eye on the stocks, see what they're doing to gauge for where the futures market's going to be moving. So key ones, Apple, Tesla, Microsoft, Google, Meta, and Amazon, getting a feel if they're all correlated, moving in tandem. That's going to help us with our trade opportunities on the NASDAQ. Approaching a 3-minute sell zone, just a little bit higher. So I would be cautious in case this would be a bull trap. Breaking above here, we do have a 3-minute sell zone, 12,190. With our stop at 12,234. And then again, also looking for price to fill the gap just means take where current prices now, 11,933.75. We would anticipate price to come back up to fill that gap up to where the prior session's closing prices, that dashed blue line at 11,977. All right, going over to Russell. Also did want to leave an illustration on that we went through in our 3-day futures trading boot camp. So thank you for all who attended that. We had a great 3-day session. But just want to give you guys some detail on what we're looking for in mastering the charts and how we can identify these key turning points. Just again, starting off still inside day. We haven't broken that prior session's high or low. So expecting those choppier market conditions. Going down to the 1-hour time frame. Here's where we get more of that detail of how we're looking for our trade opportunities. It's all about what we do in mastering the charts. So looking for our sell territory, we identify structures within those sell territories based on whether we make a higher high or a lower high. That trains our eyes to look into very specific areas within our sell territory for our zones. We found this 15-minute sell zone that was on your prep screen from last week, and we had a successful short trade opportunity here. So if you're not doing this, make sure you're mapping out all this information on the left-hand side of the chart in order to gauge what's going to happen on the right-hand side of the chart. Scott, looking at a lot of other traders I follow on Twitter and other resources, most are predicting a ton of sideways chop today. Rare to find so many folks in agreement, spooky, right? And we're starting to see this as well, where we're inside day. Market conditions have been pretty volatile, when we had that huge rally and then a big drop to the downside. So we're not getting clear, information if we're going to have a huge move to the upside or to the downside. So today, going back to what Scott is saying, be a little bit more cautious. We don't want to get caught in that sideways chop and be over trading on days like this. We really want to wait for those key trading opportunities, which is where, again, going back to these zones, we may see some clearer setups that we want to participate in. But equity indexes, a little bit choppier, a little bit more challenging to maneuver on days like this. Morning, Daniel. Good to see you. So Russell, again, just wanted to show you that past picture perfect setup that we do. And then if you haven't signed up for Mastering the Charts yet, make sure that you do so. Zones here, again, this is going to be more of a pivot point, not necessarily a zone. And then this zone has already been tested. So we really need to continue to zoom out to see where we have our zone trade opportunities. Let's see. So I'm going all the way back down here, 10-minute time frame, 1716.9. Stop at 1702. We can see here, if we're looking for a zone in here, that price has already used up a lot of these orders where price was moving higher, filling up those buy orders. So less unfilled buy orders at this point. This is where we may anticipate a breakout trade opportunity to the downside. Sell zone, we're looking at a 1-minute zone up here. That is going to be at 1953.3 with our stop at 1959.9. And then lastly, the Dow. So no surprise there, also an inside day along with the other equity index features. Price has come up into our sell zone. So when we would look left and see why price stopped here, we look left similarly with the Russell. We have our sell territory, we have our support, we have that structure within the sell territory, and we found our zone, which was a prep screen zone within that area. So we can see taking advantage of short trade opportunities, all about continuing to look left and see that that information is present. So that one's already been tested. The next sell zone, you're going to need to look higher than that since that one's already been tested. The next one is going to be this 15-minute sell territory. Sell zone within a sell territory, 36,154. Stop at 36,282. And then buy zone also a little bit further away. So again, trade opportunities for today going to be a little bit more challenging to find. Let's take a look at the equity index futures, gauging if they're moving all in tandem, which they appear to be doing so. So S&P, NASDAQ, Dow, and Russell all moving to the downside. We're seeing that correlation there, maybe anticipating some more bearishness in the meanwhile. But just keep in mind, we are still inside day and looking for those gap fill trade opportunities to the prior session's closing price. Taking a look at bonds also moving to the downside along with the equity index futures. Typically, we want to look for that inverse correlation between the two. So something that we'll want to monitor is if bonds are moving to the upside while the equity indexes continue to move lower, or potentially the bonds are going to continue moving lower, and we'll see the equity indexes transition to a move to the upside. Internals again, so looking at trend more when we have those extreme movements to the upside or downside to gauge if we're seeing some buying coming into play or selling. Tick, advancing issues over declining issues. A lot of times on inside days, we see price on the internals in the no trade zone. So we'll keep an eye on those as well. And then VIX also has been more to the downside as the markets have been moving higher. We did have a slight gap up on the VIX as price started moving lower. But overall, we take a step back. VIX has been moving to the downside with less fear and volatility in the markets. And then lastly, pre-market indicator, slight gap up in the pre-market, some more upticks and up volume, a little bit more bullish sentiment here. I would say just keep in mind everything that we're looking at, conflicting bits of information with it being an inside day. We expect choppier market conditions. Pre-market indicator indicating a gap up, so a little bit more bullish sentiment. Also, if we're looking to fill the prior session's closing price, we're looking for price to rally up to fill that gap trade opportunity for that gap fill opportunity. But overall, just again, keep in mind our zones are going to be a little bit further away. So being cautious on inside days until we do break that prior session's high or low and it transitions to an outside day. Alrighty, I'm going to pass it back over to Jeff. We'll take a look at his zone setups for today and we'll jump right into it. Thank you guys, and Jeff, it's all yours.
Good morning, everybody. Markets are not what the equity index is, but what the other things are looking for some good opportunities. If you were in the Discord room a little bit earlier, you would have captured several of these that we had posted. The prep screen, we're still waiting on soybeans to trigger. It did pop in. Technically, it triggered on the chart, but I wasn't involved. I do have a trade set up to go long as posted on the chart. Aussie dollar, Swiss franc, gold, 30-year bonds, all going inverse, well, all using the US dollar as the US dollar pulls up, looking for those to continue to move down. Okay, so a lot of activity that goes on in the Discord room in the pre-market. Folks that are up early, folks that are around doing some other trade opportunities and things like that, or just doing research at different times of the night, can't sleep, whatever. I do get up early. I do get a lot of preparation done ahead of time. So make sure you go into the Discord room, collect some of that information there so that you can capitalize on some of these. Now, if you're just trading futures on a budget, your day's pretty much done and the markets are not even open at this moment. So if you're new to us, then we have Mastering the Charts coming up this weekend. Make sure you get in there and get involved so you understand the pre-market routine, understand what we're doing, what we're looking at. As far as what Caitlin has already been pointing out, that we're inside the prior day's trading range. So I stopped looking at the equity indexes for a trade opportunity this morning. Most of the opportunities are outside of the range or the prior session's high and low, and we're waiting for that move. Overnight session, there's really not a lot going on, other than we might have a little resistance right up at the prior session's high, which we could document that. Not a trading opportunity per se until we get that third touch, and then we can look for a breakout trade to the upside. Okay. NASDAQ, yeah, we're just chopping around in that overnight session. Keep in mind, what it would be very opportunistic is if you started measuring the Globex range. We're about 5 minutes away from the market open, and you know, when you start doing your own research, is take the distance of that Globex range. If that Globex range is a certain small, okay, if it's a small overnight range, often it leads to, well, often it implies low volatility, and then we're looking for high volatility. It looks like our bonds have started to move a little bit, but we're doing pretty good. Did anybody get any of those trades this morning? Yeah, I even went down to the tick chart and there was no real good opportunities on the equity indexes until price got to the extremes. Nice job, American Eddie. Yeah, so we'll come back and participate in some of the equity indexes once the markets are open and starting to move around. But there was a lot of activity in the pre-market prep that was implying that the equity indexes are going to be slow and choppy. As Scott pointed out, you know, a lot of talking heads and people on Twitter, Facebook, stuff like that, looking at all the equity indexes being choppy. So stop looking at the equity indexes. Go look at something else. We got other products to trade. Okay. So if you are just focused on the equity indexes, that's okay. You're just going to be waiting a little longer. Okay. So natural gas did get a gap down. Okay. So we had last trade day earlier. So can anybody tell me if this was a natural gap or if it was a contract rollover gap? Was this a natural gap or a contract rollover? How do we find out? Yeah, I do want to bring your attention to this because, you know, trading futures product, there's a certain level of responsibility that you need to know the ticker symbols, expiration dates, and so on. So we're looking at natural gas as we come down in here, and we got the F contract. Okay. And one of the things to go out and check is the calendar. When you see a gap up or down on some of these commodities, you want to know, well, what the heck happened? Okay. Today's the 5th of December. Okay, are there any last trade day? It looks like 29th of December is first and last position. I don't have anything in here that is telling me that this was a rollover gap, a last trade date gap, last position, delivery. This is all telling me that this potentially is a natural gap. Okay, so why would this natural gap come into play? Okay, was there news or economic reports or things like that that came out that may have shifted things around? Okay, in the Discord room, you could see that there was, and I'm going to bring this back up. Chris, one of our traders, was posting some information about crude oil. Okay, Europe sets Russian oil at $60 a barrel. What changes now? Okay. Those are big pieces of information. As you scroll down, you know, well, what does that mean if nobody's going to buy the Russian oil until it gets down to 60? Well, Russian oil is produced and manufactured actually at about $90 a barrel. Okay, so they're taking a huge loss, but you know, are they in that much need of money at this point? Okay. So the Discord room and the Discord community is becoming a very valuable place to be checking out as part of the elite trade. Okay, community is really important. All right, still looking pretty good on some of these. Yeah, I've got heck, let's just close up everything and call it a day. What do you say? Now, also in the Discord room, I do want to also point out the active income. So when we're not doing a live trading session, we're not live on there, you can join the active income workspace where traders are talking out loud. You can hear them and participate in that, share your charts. Like that, you know, Daryl has been making some really great calls on natural gas and some of the other products in there. And you take a look at his chart, then you can go and see if it's something that you should be participating in. And if it meets your trading plan. Okay. All right. See, we're building product all the time. Okay. And the more the product that we build and the more products that we put out there, the more you're going to see the stronger support for our students here. All right. So each one of the equity indexes are inside the prior day's trading range. Okay, so I don't have any zones right now that I would be really targeting or going after on each one of the indexes inside the Globex high and low. As we pointed out a little bit earlier, the zones that would be most reflective are going to be outside the prior day's trading range. One of the things I posted on Twitter today was that, you know, we should be paying attention to how do we gauge and understand the market open. Well, the pre-market routine that I've put together and been using for several years, sharing with students, gosh, 10 years plus, okay? These are very specific pieces of information, not the only pieces of information, but very specific pieces of information to help you understand the trading environment prior to market open, okay? Reason I'm not flipping around a lot of different charts is computer's slowing down a little bit. The trend has been low for several days, okay, implying that there's a lot of selling going on. Today's the first time we saw that the free market that the VIX was gapping up. Okay. VIX was gapping up. It looks like we just got the Swiss franc. Is that correct? No, we got soybeans. Sorry. All right, so soybeans did trigger. Anybody participating in the ones that are not equity indexes? I'm trying to get my charts to keep up here. Okay, so soybeans underway. Get a little volatility on corn around the opening of the session. That's normal. Okay. If you were stopped out, you still have an opportunity to participate. Just manage your expectations by watching what the dollar is doing. Okay. US dollar is in an area where there were some block orders earlier in the session. Okay, price going through that, we got a nice little pocket of points. That little pocket of points and breaking above the 104.735 area is going to create a little bit of momentum. Okay, now in timing a profit potential, okay, as long as the US dollar is going up, I'm still looking at gold, Swiss franc, Aussie dollar, and bonds as they're going to continue to go lower. Okay. As price pops into that area, that's when the momentum will start. Once that momentum starts, I need to know where it may pause or slow down. Okay. And then we correlate that with the demand zone or supply zone so that we can participate in that either as a trade or as potentially closing some trades and taking some profits. Okay. So as we are monitoring things, look, that corn got a little fluctuation right there. Didn't stop me out. Still have my stop in place. And yeah, it looks like crude oil is still continuing to go up. I did have a trade on that earlier. I was stopped out as far as the open range breakout. Okay, took a small loss of about $60. Okay, I'm still bearish on crude oil. Okay, looking for on the 5-minute chart, looking for price to break down into that dead space. Therefore, I do have a trade set up and it is live 81.91, looking to sell short as price breaks back into that little dead space there. All right. So we're setting up our day, putting things together, getting a couple of trades out there. Strongly encourage you to be careful to not wait to the last minute to place the order. Okay. Often when we wait to the last minute to place the order, we might be looking some other direction. Okay, we got soybeans. Let's bring up what do we got? SF23. We're trading SF23. Come on. Okay, some additional things to be aware of. Okay, notice that the big dead space in here. Notice the pocket of points. Why was I really aggressive on getting into this one? Especially if we're inside the prior day's trading range, okay, because there was a lot of opportunity. Okay, price is still making its way up to the opposing zone. Okay, we had a little breakout. Price was basing there in the overnight session. Okay, nice little breakout and a pocket of points within a dead space. Okay, so you could extend the dead space all the way across. Okay, and when you have a pocket of points inside of a dead space, it could give you some good price movement. Now, if you're just short-term trading and you're trading on a budget, so to speak, okay, smaller account, then grab the profits and do the happy dance and come back again tomorrow. Okay. See, there's a lot of opportunities here. I'm watching and waiting for these trades to play out, but you need to have your own trading plan intact. What is it you're looking to create on a daily basis? What is it you're looking to manifest as a trading plan? Okay. Some traders say, you know, heck, if I could just make $1,000 a month, that would be great. Well, that's only $50 a day. Okay. And just making $50 a day on a single trade could make that happen. Okay. Anyways, big picture. Trend is still leaning towards the upside on the 480-minute chart. We do have a big pocket of points that has not been satisfied yet. These are some newer areas that were plotted and posted on Twitter. 39.57, 39.34. We just tagged the 4,096, and to the upside, we would be looking for that range about 4,218, 4,148. Okay, so the big picture is not really a place for you to make trades, but it is a place for you to observe that if price goes down, this is an area that we should be paying close attention to. If price goes up, we should be looking for this area. Okay, now over history, I'm just going to bring up a couple of pictures here. I'm just going to go back about the last 10 days or so. Actually, a little bit more. Okay, but as I've been posting these levels here on the big picture, they play out very nicely. Okay, now we wait for the trade opportunities. We participate in them. We know where the buyers and sellers may come into play. Okay. For short-term trading, we need to know when we are looking for the market to stall, hesitate, where we have different trading opportunities on the smaller time frame. Okay. So when I do post these things out on Twitter and get that information right in front of you, pay particularly close attention to a lot of those areas. Okay. It's not necessarily a place to take a trade all the time, but it is a place to become defensive. Okay. All right. So what do we have left on the trade opportunities here? Well, we have euro, we have Canadian dollar, and crude oil. Okay. Now crude, I'm looking at a small time frame to take a trade short. As we pointed out earlier, we'll come back to that. 81.91, looking to take that trade short. We're going right into a dead space. Okay. And towards the lower part of that dead space is a pocket of points. Okay. We can see that that was an area also where price had a strong move away. Okay. So once price does get into the dead space, I am looking for it to go on to the other side, back down to support. Okay. Once in the trade, I will monitor my risk and look for my potential reward down about $80.27. Okay. So crude oil also to the upside, 84.31, a supply. And on a bigger time frame, breaking support 79.92, we could be looking for a much deeper pullback. Okay. Now the dollar has kind of gone quiet. I'm looking for it to clear that block order right there. And then we'll get that little momentum move. Between 8 a.m. and 11 a.m. Eastern, we are also watching, should price intersect with a demand zone or a supply zone? Okay. And I think you're all noticing that I'm not spending a lot of time on the equity indexes at the moment, correct? And why am I not spending a lot of time on the equity indexes? Anybody? Well, Russell giving us a lead, but really no entry. There was no breakout. Okay. Now my prep screen zones may be a little off from what was posted today. I had little time to get caught up. These were from Thursday, Friday session. All right, so nat gas coming back around. I'm gonna potentially flip this around. Okay. Nat gas had a nice gap to the downside, and we're starting to form little resistance area. So I may be looking for the opportunity to go long nat gas. The short trade, I'm not looking to participate in so much because of the gap. But looking to go long above 5.901. Okay. As far as the question on soybeans, okay, the picture's right here. What is my intent on soybeans? Go short or go long? Thank you, Daniel. Yeah, go long. Okay. So sometimes it baffles me on the questions. Okay. So I am long soybeans at the moment. Let's come back and look at the I've got the soybeans. Took the trade at the breakout 1447, 6/8. Okay. Target 1461. My stop loss is in place. I may tighten that up. 43.68. Okay. But as far as the equity indexes, have they done much other than Russell? And Russell's making a good move, but what's my entry? Okay. So let's change some timeframes on these. Let's see if there is enough for a base. Let's see again. Should we take breakouts on an inside day, or should we just kind of patiently wait for price to come to a zone? Yeah, no breakout trade. We've seen that time and time again where things have been really choppy and designed to take our money, and we've gotten beat up because of taking breakout trades. All right. We also can see right over here on IBM and Goldman Sachs, are they going the same direction or are they going opposite direction? All right, so we have IBM and Goldman Sachs going opposite directions. We're inside the prior day's trading range. I would also kind of make the assumption that cash and futures are somewhat balanced. How do we determine that? Well, we take the number of Dow stocks that are negative over 94 cents, number of Dow stocks that are positive over 94 cents, and we net the result. Okay, so right now we're looking at, oh gosh, about 15 Dow stocks. So 15 times 2 would be 30. Cash equals negative 30. Futures are trading at negative 28. Yeah, cash and futures are balanced. Okay. So we use fundamental information outside the price chart. Yeah, and the dollar's not moving much, but we are getting the rock and move on the bonds. Was anybody able to participate in the bonds? Come on, charts load up. Nice job, Randy. Aussie dollar, I saw Yeti was in that one. Marks and soy. Okay. Yeah, I'm trying to adjust my stop on the bonds. Come on, bonds, move. All right, so we're doing, okay, looks like crude oil is getting back, almost ready to trigger our entry on crude oil. Breaking back into that dead space. 84.91. Find a place that you're comfortable to have your protective stop loss. Okay. Tick chart, equity indexes are still just kind of quietly doing a whole lot of nothing. And S&P did have that small time frame. It's breaking down. That breakout trade, look how it just broke out. Yeah, and potentially will whipsaw people right back out of a trade. Okay. The inside day trading environment is one of our great odds enhancers that we use in monitoring the price charts. Okay. Information outside the price chart, such as IBM, Goldman Sachs, or additional odds enhancers that help us watch what's going on as well. I agree with that, Daniel. And Daniel's point is that, hey, RTY is taken, we'll take everybody else with them. Okay. Although we do have NASDAQ popping to the upside and S&P and the Dow kind of just slowly grinding sideways. I'm going to connect each one of these charts by seeing what by changing the increment.
Order filled.
All right, looks like we got crude oil. Yeah, coming in here and placing my protective stop loss. Anybody else participating? What time is it? And what is the dollar doing? Some other additional influences that may cause some fluctuation here. Once the dollar starts breaking into that pocket point, I expect momentum. That could be around at 10 o'clock or 10:15 reversal time. Okay. We're also getting a nice move on gold. I'm starting to get to that feel good point where I just need to start taking some profits on some of these. Chris got CTL, great. Okay, so another great odds enhancer, something we do teach in the mastering the charts, okay, is when we have a break above a resistance area, okay, we have below where we have resistance and support, and we have that dead space, and also a pocket of points, is these little topping patterns, okay? These little topping patterns just above a resistance, or just on the other side above, below our support, have often led into some bigger running moves, okay? The dead space is that area between resistance and support that is often where we see price easily move through that area. Where'd my dollar go? Yeah, just trying to keep a close eye on the dollar, looking for when that momentum is going to kick in and looking to profit from some of that, okay? Tick charts, yeah, we're avoiding the breakout trades at this moment. And it looks like some of the agriculture products are stalling a little bit, corn and soybeans that I'm already in. But it does look like the financial products are moving pretty significantly at the moment. This is why I'm keeping a real close eye on the dollar. Looking for that momentum. That'll be my cue to get out of the other trades. Gold making a really good move. Crude oil's on the move. Often when we have tails, they're just pointing that your zone is lower, okay? We're 8 minutes to the top of the hour. Ooh, nice job on the crude oil trade, Miss Chris. Excellent. Crude oil 81.45. That's what you're looking for on that. It looks like we might have a little more momentum. Yeah, it's going right through that, Chris. Still profit, Miss Chris. I know. I had many trades like that before. This is why you guys come to the live trading room, right? The pre-market prep is so important, okay? And that pre-market prep that Caitlin puts together for us outlined what is happening right now, okay? Understanding the market conditions ahead of time is a very big part of putting all the pieces together, okay? Now, not everybody has the money to trade every one of the products, okay? But it doesn't take much if you're just taking one micro or a mini contract on each one of the products, okay? Now, granted, I may get stopped out of a few of these. I'm still negative on the corn and, well, Swiss franc, not Swiss franc, but the soybeans is positive just a little bit. Now I have a choice. Okay, should I get out? You guys monitoring the dollar? Yeah, we don't need to sit in front of the truck and wait for it to come and hit us. We can certainly jump out of the trade if that's what we want to do. But it looks like gold is right in that area where we could see a bounce, okay? Same with the Australian dollar. And we're just got to, may have a little bit more on the Swiss franc. Okay, I am going to reassess corn and I'm going to remove that. Closing corn at the market.
Order filled.
Closing soybeans at the market.
Order filled.
If the dollar continues to get up in that area, I still have an opportunity to get into that, okay? But we want to cut our losers fast and look to ride the winners, okay? So I didn't need my focus to be on a losing trade. I need my focus to be on the winning trades and look for where we might have that potential opportunity. Gold is approaching the area where we have that little speed bump, okay? 78% of the time, the first time we test a support or resistance, we get a bounce, okay? So I'm closely watching that, 4 minutes away from the top of the hour. Crude oil, okay, coming into that area, we are still going through that dead space, okay? Still going through that dead space and going through at a pretty good momentum, okay? Large picture, we do have a support, very similar pattern, okay? 79.84 getting the breakdown into a larger time frame. Dead space, okay? Uh, 6.77. Which one is that? There we go. Yeah, so as we approach the top of the hour, I'm expecting a potential bounce or reversal, okay? Keep a close eye on the US dollar. US dollar is starting to get back up to that resistance area. May see a little stall right here. Time that with the banks and institutions and what they do in the first in the pre-market here and just after market open. Aussie dollars continuing to move lower. Bonds, I would say our target on the bonds. Looking about that 128.1730. Swiss franc, all the FX markets. Now, part of the pre-market routine and what we go through is understanding what the dollar and the FX products are doing. Now, if the FX products are going to be moving and we're looking at our equity indexes having a tight range, IBM, Goldman Sachs going opposite directions, cash and futures are balanced. Look at the daily chart on the S&P. Price is holding that 200 simple moving average, okay? And looks to be like it's a resistance at this point, okay? So if that is resistance and price does come back down, if it closes below the 50 simple moving average, this would be extremely bearish for the overall markets, okay? So pay particular attention to the things outside the price chart, okay? Yeah, we got a nice little pot there. Getting a little bounce. Anybody else take a profit on crude oil? We're still right in the middle of the dead space. We could wait for another third touch of this area and get back in, put the money in your pocket. What are you going to do? What are we going to do? Looks like bonds are getting a bounce. I've already given back a little bit more than what I'd like to on the bonds. Okay, getting a little bit of a bounce. I'm going to go ahead and close that on the bonds. And just wait for another entry. Well, maybe not. Now it'd make me hold my breath. Bonds, whoa, nice. Come on, catch up, catch up. At top of the hour, I'm trying to free up my resources here. Dollar just got a huge move. All right. Okay, but we're approaching that resistance area. Okay. I might pause my screen here in just a moment because I've got to get out of some trades. Everything is moving in my direction, but I don't have control over it. Yeah, I'm trying to get my screens to catch up. I'm looking to get out of some of these trades here. And I'm watching the US dollar, so just bear with me while my computer's catching up here. Now, I just need about another 10 or 15 seconds here, Daniel. We also have Kate here to back me up. But thank you. All right, we're back here. All right, I've got to get back over to my other page here because the dollar's approaching that resistance area, 105 area. And this is where I expect us to get a little bit of a bounce here. Come on, charge.
You want me to jump in, Jeff?
Yeah, I'm gonna have to close. I'm going after my profits now, so I'm gonna yeah, I'll stop sharing.
All right, no problem. All righty, if you want to jump in and tell me which ones you're jumping out of, I can maneuver to those charts.
Order filled. Order filled.
I'm gonna keep crude oil if yeah, you're already on that one. Good.
Order filled.
Yeah, in crude oil, we are approaching that support area, so not a whole lot in the way until we get back down here where we can see evidence of price coming down, finding those buy orders, looking at approximately 80.19 for that support area on oil. And then what else were you? I think were you in NASDAQ? A couple people mentioning that. Yeah, NASDAQ moving down as well. Again, this is going to be more of a pivot point here, not necessarily a zone. So looking to, if you're in NASDAQ short, again, we're not necessarily seeing a zone here. This is going to be more of a pivot point. And then to the left is where we have that pocket of points to the left-hand side. Do we get back down here?
Can you check gold? Because I'm about ready to pop out of gold. It's at a support. As
Yes.
the dollar is meeting resistance. Yeah. Yeah, I do want to exploit, you pointed out a lot of this in the pre-market during the prep. What to look for and how to anticipate it. I'm still in gold, but I would have my finger on the trigger.
And also be cautious because now we have this pocket of points back to the upside. So price approaching a support area, we do start moving higher. There's not going to be a whole lot in the way till we get, looks like right in here, we may have our sell zone. So that can be your target price. But again, price coming back up, we may see price move pretty easily through that pocket of points.
Order filled.
Just captured profit on crude oil, and I'll wait for another opportunity as price comes back up to a supply. And again, my finger is on gold. On gold, can you look at a 120-minute chart? and see what's below that. All right, I think I'm gonna go ahead and grab it out of there because the small time frame we're bouncing, we should be now looking for price to move back up a little bit. We do have a support if we want to break to the down, take a breakout to the downside. Yeah, gold's still going. Oops, soybeans on move back up. And gold. Sorry, not gold, corn. Ah, you have some challenges too, huh?
Yeah. Yeah, soybeans wasn't working and now corn isn't working. Anyone else having challenges with their platforms?
I'm gonna steal the screen from you real quick.
All right, thanks. Yeah,
I'm gonna get snapshot of this. 2 micro contracts. Okay. Now, if you were in our class, how much margin does 2 micro gold future contract, how much capital is used to trade those? Yeah, not much. But I did jump out of quite a few things, almost everything. And here we have soybeans and corn coming back up. So we'll have to see how the dollar strengthens. If the dollar strengthens, we're going to start to see these commodity prices go back up. So there is another chance to get into soybeans right about now. Okay, but manage your risk. Corn might be a little bit more conservative since it's just coming off. Wheat as well. Yeah. I have missed my entry on that. Dang it. All right, I'm gonna jump over to wheat. Should be trading the March contract on wheat. And we're not quite in a zone on wheat yet. But we do have an area where resistance has come in. So breaking above that 767. I prefer waiting for a demand zone on that. And I'm waiting for a little more of an exhaustion move on gold. Love to see it clear this little area. Some traders, include that as like a speed bump. But going out to the larger time frame, kind of seeing where that rally-based rally is. Okay. I use this as an odds enhancer because I know a certain group of people use that a lot. Okay. And in the Mastering the Charts class, we show you the proper location for a rally-based rally. This is not it. Okay. And if we always make reference to the larger time frame to kind of see where we're at and what we're doing, where prices may move. Okay. So, and we also anticipate other traders, the way they look and see things. Okay. Here's the biggest reason I'm jumping out of the positions I was in. Okay, as we explained earlier, price breaking above this little block order, we had a pocket of points, and as the dollar had momentum, okay, we looked for the other products to drop, which they did, and they did that between 8 a.m. and 11 a.m. Eastern, and we were looking for that as an odds enhancer to take a profit, or even an odds enhancer to take an entry on a trade. Okay. So we're still holding that 15-minute zone, but it's gonna be real tricky right here, so. One more little push up on the dollar into that block order is gonna get right there at that resistance area. Now, that's the area I'm expecting a bounce. 3 out of 4 times, 78% of the time, the first time old resistance or support is tested, you're going to get a bounce. So if you're in that area where you have a feel good and you pocketed some profits, okay, then right around the quarter hour, I'm watching the time always as an odds enhancer, which is we got about 3 minutes, especially between 8 a.m. and 11 a.m. Eastern. Okay. Looking for price to get momentum or intersect with a demand zone or supply zone on the quarter hour between 8 a.m. and 11 a.m. Eastern time. Okay. Big picture, just a quiet inside day. Equity indexes got some moves, but no entries. Okay. Now, it is very, very important to have a good, solid trading plan. You will have days where the market just runs and runs and runs, and we have no entries. Just accept it, okay? If there's no entries and you try to take trades, you're going to accept more risk on that and less potential reward. Even though it may look so tempting and so good to be participating in, chances are it's going to stop you out. All right, now I have to go back and look and see, did I get out too soon? Well, we got out. That was a good exit on the bonds. Got a nice bounce. Got a bounce on Aussie dollar. Okay, you need to reset that one up on a larger time frame. Opposing zone is still lower, might have an opportunity to get a breakout or price retracing back up into that supply. Okay. But gold is still cruising lower. How about oil? Yeah, it still has potential, but that it did exploit where resistance and support were at. Okay. We are in just above that pocket of points. And if you're holding out on crude oil, then you're going to be looking for the other side back down here about $80.21. Okay. Price getting below 79.84 would open yourself up. Little pocket of points right there, but a speed bump just below it. So you may get a small move down to about that 78.67, maybe about $1 move on that breakout, 80 cents. Okay, but be prepared for those little speed bumps on the left-hand side. Okay. Anybody still in crude oil? Yeah, I'm just waiting for this little exhaustion move. Now, a good idea that there's going to be an exhaustion move. See these little gaps in the price? Like a 1 minute. See the gaps down here? There's not that many contracts in the way. And you can also see just over to the side right here, the volume is getting very light. That was the exhaustion move. We're right on the quarter hour. I don't have a zone here, but I do see that old resistance, which may become new support. I'm just looking to see. I got my finger on the button. And I'm going to pop it up.
Order filled.
And we're out. Okay, so that was geez. Now what do we do with the rest of the day? Trading the equity indexes. And this is one of the thing I want to really play Halo. Actually, I was watching those movies yesterday. It was in Arizona. I mean, this morning it's really cloudy, almost foggy out, which is very rare. I can't even see the mountain range, as I look, to the east. Yesterday and the day before, Saturday and Sunday, now Monday, have been really gloomy. It's kind of like where everybody goes and stays in. I couldn't even find any of those fire logs yesterday. Everybody grabbed a fire log and looks like they stayed home and watched movies. All right, so yeah, gold is still moving. Canadian dollar also, but we didn't take a trade on that. Wow, bonds still going. Let's take a quick look at bonds as they may be approaching a support. And we're waiting on wheat to get back down there. So coming back to the prep screen, the information that from the pre-market routine, okay, you may start to tune it out simply because it sounds like it's redundant every day. Oh yeah, we're checking the indexes, we're checking the dollar, we're checking the inside day, outside day, and so on and so forth. All of that information is critical and extremely important for us to use and understand what the environment may be like outside the price chart as well as on the price chart. Okay. Yeah, it looks like we still have support down here on the bonds. And back down 128, 11/32. Okay, that'll be the third test. We expect a bounce. Okay. May get an opportunity on the smaller timeframes to capture or play 1-to-1 on the bounce, and then wait for the next area for price to break. Markets are quieting down a little bit. Okay. Often on an inside day between 8 a.m. and 11 a.m. Eastern, you will see some of the bigger moves happen around the 10 a.m., 10:15, 10:30, at 11 o'clock Eastern time. Okay. The quarter hours are very important to watch during the opening session. The internals, okay, we did get a little bit of a sell program, nothing on the buy side for the ticks. The VIX is up $1.30. Okay, so when we get to extreme complacency, that also scares some of the bigger players. Okay, as far as advancing issues over declining issues, we're on the low side of things. Okay, and getting a bounce on crude oil. We do still have a trade opportunity on natural gas. And this was a natural gap. It wasn't due to contract rollover or anything else, okay, or expiration, or this was a natural gap, okay? And more likely, the natural gap was caused because some of the information that was coming out about crude oil and such. Nice move on gold. All right, I'm jumping down to some smaller timeframes on the equity indexes. All right, so we have a zone entry for Russell, 1886, 1889. Or you're waiting for price to come down to your prep screen zones, okay? Dow. No, I'm not expecting a gap and fill at this point. We already, let me come back to it's a great question, okay? Well, yeah, I guess we are waiting for it. What normally happens on an inside day with the equity indexes? What's another normal thing that happens? We'll call it normal because it happens to be probably greater than 80% of the time. Gap fills. Excellent, Chris. Okay. So we opened up and are still inside the prior day's trading range. So the probability of gap fill is very high. So thanks for pointing that out, Jeff. So at some point during the day, I would anticipate that price will come back up and look to close those gaps on the equity indexes. Now, this is also something that Caitlin pointed out in the pre-market routine. It's something we watch for. Okay, when we're assessing the markets for the pre-market, when we're assessing the markets during market session, we see what is normal and happens a large percentage of the time, and we use that as an additional odds enhancer. Okay. So in order for us to get long, we're going to have to find either a fresh accumulation of orders, okay, which we could go down to the tick chart and start looking for a fresh accumulation of orders and look for where we start to have 3 touches of resistance and start to make our way back up to fill that gap. Okay. Don't try to jump in too early. Big banks and institutions will run it up when they're ready. Okay. And we'll see their footprint. We'll also see them manufacturing a potential reversal. Okay. Looks like the NQ may have the first opportunity on this. In as much as I do on a 1000 tick chart right now on the NQ, I do have a resistance area. Okay. Also at this resistance area, looking to the left, I have an opportunity for a nice little pocket of points. Okay. As I continue to look up and left, I can see that there is another area, kind of almost like a stair stepping down. Okay. I expect there to be some more resistance in that area. And going all the way back up to the top, or not all the way, but as we continue to look up, we have another resistance area. Now, each one of these times that price breaks a resistance area, we could look for that opportunity to participate in a breakout trade as long as each one of the areas is qualified. We're also forming a support. I see that too. Now, notice the move into this sideways chop. This particular pattern is often associated with a continuation pattern. Okay. Now, with a continuation pattern, normally the breakout, especially if it's sideways, how many times did price bounce around inside of this area before it breaks out? What's the normal? Yeah, we're looking for the breakout. Now, which direction would we be looking for it to break? Going up or going down? So I'm looking at this as a potential breakout trade. But as we've said before, taking breakout trades on an inside day are elevated risk. Okay. Now, sometimes you may cross the street when the crosswalk says don't walk. But what information are you assessing to make that a possibility. Well, you're looking left, you're looking right, or looking right and looking left to see what may be happening now. Okay? Is it safe to engage in that? And if you choose to take the risk, you're choosing it to potentially get stopped out. Okay. Now, very often price breaks out on the seventh time. Okay. It can be the 9th or 11th. It's usually the 7th or the 11th. But if you start looking at it, it's just basic math. Okay. If price comes up and makes an 8, then we expect 9 and then 10. Choppy sideways market. Well, inside day. Okay. So taking the breakout is going to be elevated risk, but it's your best potential trade at this point. Okay. And you're stepping outside the box a little bit on this one. Crude basing. Nat gas potential trade 5.901. Looks like we did go down a little bit further on gold. Just kind of looking around, trying to find where our supply zones may be located. Okay. Now, if we're expecting a gap fill, we may target that area, but still do all of your due diligence. Find your support and resistance areas. Okay. Draw out your boxes. Find the leg base group of candles. Okay. Wait for that gap fill. Okay. I'm sure Caitlin's well ahead of me on all of this and pointing those things out, just like she jumped right on crude oil and said, well, it's back up here. Here's your breakout. Your zone is up above that area. Turn the time frame down or up and find those zones. Okay. Now, this inside days are just days that you know you're going to be waiting a little bit longer. But what we've started to incorporate is if you realize when you start out doing your prep work and you see that all the equity indexes are inside the prior day's trading range, you need to pull up the other products that are not part of the equity indexes. Ooh, looks like bonds kept on going down. Okay, so bonds are back at support. And we'll see how it holds that support. Okay. Now, bonds arrived at support just about the same time the dollar arrived at resistance. Okay. So we use the US dollar as an odds enhancer to take profits. Has the market gone well beyond that at this point? Was that just a nice, good momentum trade? Okay. Understand the rest of the day could be still pretty choppy and designed to take your money. Okay. Playing the equity indexes, we need to be more patient and wait for price to come back up to a supply. Okay. Around the gap fill would be kind of that perfect case scenario. All right. How'd you guys do so far today? Anybody take any trades? Wow, glad I got out of corn. Okay, nice. Wow, still short the natural gas. Okay, that was a nice. Did you get the gap down, Scott? Nice. Yeah, I'm trying to bring up the chart on the NQ, the tick chart, show that breakout. But I think I'll just go ahead and pass everything over to Caitlin so she can wrap up our session.
All right. Thank you, Jeff. Great job, everyone. Yeah, the market conditions are not super easy today, just based on it being an inside day. So on days like this, you can see Jeff going down to the smaller time frames, even the tick charts, trying to find ways to splice in, and always, looking at other products too. So if it is an inside day and we are expecting more volatile, kind of choppier market conditions, look at the other chart setups that we're giving you in the Discord group, as well as once we start our day on the prep screen, giving you guys some nice trade opportunities today. So prep screen is going to be the same, or our recap screen is going to be the same as our prep screen. Since we haven't had price reach those areas, just want to give you an overview of where we're at right now. So S&P coming back down, this area we mentioned is a pivot point, not necessarily a zone. So continuing to look down to the left, we have our next potential breakout trade opportunity down here around 39.47. But then just below that, we have our 10-minute zone at 39.27.75. Stop at 39.15.25. And then sell zone, nothing really up here. A lot of these are going to be on lower volume. So keep that in mind as well. Make sure you're checking your zones. If it's high volume versus low volume, we're going to want to give more credence to the ones formed on higher volume than the ones formed on lower volume. Going over to the NASDAQ, go here. And zooming in. So price coming back down again, we have a pivot point, which is going to be this first area here. Since we don't have the three touches on the top side and the breakout, that's going to be more of a pivot point. Just below that, we have a pocket of points, and then a couple more areas where we have pockets of points to the downside. So zones, a little bit more challenging to find if you're looking for long trade opportunities, a bit more challenging to find them, but keep an eye on areas where we do have pivot points and pockets of points. We may expect price to move through these areas a little bit more quickly, which we're seeing now on the NASDAQ, getting that move to the downside, nothing much on the left-hand side to really stop price from moving lower. So down and to the left, again, finding the next fresh zone, we have our 10-minute or our 1 minute at 10,566. And then stop at 10,513.25. Nice job, Scott. Just over 600 after commissions and fees. Wonderful. Yeah, some of those other products worked really, really well today. So make sure, again, you're checking those ones out versus necessarily just sticking with the equity indexes. And then sell zone going to be a little bit higher up. So anticipating potentially a bull trap. We do have a 3-minute zone up here. That's going to be at 12,190. Stop at 12,234. And then going over to the Russell. We can see how this trade setup panned out on the Russell, where price came back up, tested our sell zone, and then since then we've had this continued move to the downside. So this area has already been tested once, potential breakout to the upside if we start to break through the sell territory. To the downside, we have our support area. Price has come down, tested it once, twice, 3, 4 times. We even consider this a 5th time here. So price breaking below the support area, below 1820.6. You'd expect price to move lower into this pocket of points to the left-hand side. So again, always keep in mind, we want to look left. There we go. The pocket of points to the downside. Again, here's that support area that's been tested several times. And then going over to the Dow. The Dow also coming down, not a whole lot in the way until we start to break into some of these pockets of the points areas. There's another area where we have this big green candle to the upside. The next fresh zone, 5-minute time frame, 33,338. And then stop at 33,305. Sell zone already been tested. So the next one above that area is going to be at 36,154. stop at 36,282. And then just checking real quick. So we did have copper as a breakout opportunity from our prep screen that was at 3.383. Just jump over to copper and see where we're at on that one. Yeah, so we did get the breakout on copper. Going down to the 15-minute time frame. I think we found it on our prep screen. It was a 15-minute breakout trade opportunity. If you are in that one, let's see, our zone would be right in here just prior to the breakout. So can either, we missed the breakout trade opportunity. So looking for our zone, we'd be looking just prior to where price broke out to the downside. I would hone in this area to find the leg base group of candles to manage your risk for that copper breakout to the downside. All right, so take a screenshot of this. We have our buy and sell zones going to be the same as our prep screen zones. Just keep again in mind that it is still an inside day. So we're looking for our zones to be a little bit further away. May have to wait for some of these trade setups, but just be cautious on days like this with it being an inside day. And when it is, looking at other different products to find some of those better trade setups. I'm going to save that. Jeff, anything else that you'd like to add before we wrap it up?
Yeah. A lot of the things that Caitlin mentioned in the pre-market routine and getting you guys set up are so vital and important. I want to stress that so much more. Okay. The prep screen zones and the way that we assess the market conditions before we start taking trades, the use of the Discord room. Okay. If you're still struggling, please let us know. If you're not doing the pre-market prep, if you haven't done your 100 picture perfect trade setups, let us help you. Okay. The Discord room is our community is very important to be utilized and used, especially in these market conditions. Don't take this very lax. Get on your game and get ready. If you haven't signed up for the Mastering the Charts this upcoming weekend, or if you know somebody else that's struggling, point them in our direction. We'll be putting some information out there. I'm just finishing up a tweet that I'm going to put out there in just a moment. If you are on Twitter or Facebook like that, please forward it. Help somebody else out during this time of year. I mean, all of you have seen and worked with Kate and I in putting these things together. Wow, CL is still going. Oof. And just really appreciate all of you. And we want to help you make the money that you're looking to make. Okay. Well, actually, we want to help train your eyes. Let's put it politically correct. Okay. So crude oil is still coming back down into that support, larger time frame area. Let's pay particular close attention to that. And love to see you guys all on the Mastering the Charts. Okay. So go out to the website and watch for some of our promotions. And especially if you've already taken the course once before, you need to take it again. Look for the discounted price. Okay. Have a great day, everybody. And we'll catch up with you later.
Have a great day, everyone. Bye-bye.